The greatest mistake you can make in life is to be continually fearing you will make one. Elbert Hubbard. My friends, we're not worried about making mistakes because we practice trade here to show ourselves approved, to gain the skill set and the knowledge. It is learning by doing. And what is a better time to start than now? What is that old saying? The best time to plant a tree is 20 years ago. The second best time to plant a tree is today. So start planting that tree for your future and your family's future. 10 to 15 minutes a day, that is all we ask. Let's jump into these charts. We'll start as always with the S&P 500 up for the day, 0.55%. Price percent oscillator still negative and flat. Derivative oscillator negative, losing a little bit of downward momentum this week. Go to the 2-day. What do we see going on? We have a 2-day crossover going up. Now, what does that mean? Well, that may mean that we're going to see in the not too distant future possibly a weekly vertical crossover going up. That may be in the cards. Hasn't happened yet. It is possible. And of course, typically the 2-day leads the way. Derivative oscillator gaining upward momentum, like we said. Price percent oscillator crossed over at the close of that candle, and we have a nice trend line, 3 candles connected. Look at the half-day chart. It has been continuing to move up almost unabated since the 23rd, since the morning of Wednesday the 23rd. Slacked off a little bit, but again, that afternoon, but we have no solid red candles. It's all open box green or a little bit of a slowdown in the up movement on a couple of reds, but continuing just to move up. Derivative oscillator gaining a little bit upward momentum, price percent oscillator spiking up. So we'll continue to watch, see what the future holds. That divergence is still in effect though. Price percent oscillator still much lower than where the price is. So shows continued inherent weakness. So we'll continue to watch and see where this goes. What about the Nasdaq 100? Well, looks like we might have a weekly vertical crossover at the end of the week. Of course, if you are part of our texting service, you will be getting that text to take a look for that happening. Again, we are watching, preparing, waiting to see if that occurs. We thought it might occur this last week. It did not. Perhaps it will occur this week. Qs is up for the day just a little bit, 0.04%. And of course, we see reaching a higher high. Derivative oscillator gaining upward momentum. What do we see on the 2-day chart? Again, we see things reaching a higher high, 355.23, 355.02 was the prior high. So this latest 2-day candle heading up, derivative oscillator, price percent oscillator moving up 2-day. We can see where things peaked earlier in the week. Back on Tuesday afternoon have been sliding sideways. And again, up for the day a little bit, but those Heikin-Ashi candlesticks weakening along with the price percent oscillator and the derivative oscillator. So again, keep an eye on what the Qs does on Friday. Make your decision before jumping into that practice trade. Just because it's a weekly vertical crossover doesn't always mean you should jump in. That's what you're learning, part of the nuance in the trading. Now, let's go on from the Qs into 20-year bonds. Down a little bit for the day, 0.12%. Although we see a green up candle for the week, still not reaching that high of 2 weeks ago, back on the week ending the 18th of June. Price percent oscillator nonetheless heading up, derivative oscillator heading up on that weekly 2-day. Again, climbing up nicely, not hitting the high previously a couple of weeks ago, but still trying to head up. Price percent oscillator moving up, derivative oscillator green, but losing momentum. Half day, you can see where things have been a little laminated over the last couple of days as things peaked and then rolled over. Again, we'll just continue to watch and see prices above the weekly and the 2-day trend lines. See if 20-year bonds are just going to get that power they had back on Friday the 18th to pop up higher. we'll continue to watch and see. But as far as where the underlying strength is, it's still pushing things up, particularly on that weekly and also on that 2-day. So keep that in mind. Make sure to put that in your show notes. Now, let's move on to gold. Up for the day, 0.34%. Is gold finally bottoming? That sure would be nice, but that price percent oscillator still weak and heading down. Derivative oscillator losing some downward momentum, but still very negative. And did I end up? There we go. I wanted to particularly show you what was going on. That was on the 2-day. What's going on the weekly? That's where we've been talking about all week with the weekly vertical crossover going down. That is what we are portending. That's what we're almost assured of on Friday. And it's that 2-day that, again, we're seeing where things have bottomed out at the same point over the last 2 days. So pay attention to what happens on Friday. Pay attention to this 2-day chart. It is losing a little bit of that downward momentum. That weekly is still strong, but check out the half-day. Now, the half-day bottomed in gold back on the 29th. That was in the morning. And then, of course, we have seen it slowly trying to move up, but not being able to match where it started moving down. And again, is sliding up that half-day trend line. And again, we'll continue to watch. It would be nice to see that really slack off on Friday to give us a good feel for gold's continued down move to match that weekly vertical crossover going down, and to see more acceleration and not just pegging somewhere around that 164 mark or so, but moving below that. Would be nice on Friday to make us feel good about shorting gold with a potential put trade, a put practice trade. Now, those of you who want to know all about options, we don't talk a lot about options here. We do reserve that training for our Patreon supporters. If you would like to support the work we do here, then of course we've got that 3-part training, Options Made Simple, the Charting Wealth Way. That is that's the first thing that we send out, along with a number of other special trainings to our Patreon members at any of our 3 levels. Consider that. And again, we so appreciate all that Patreon support. Now in gold, let's go from gold to another type of, can we call it a security yet? Well, it's another type of security, that cryptocurrency that some people like as much or better than gold. However, it's been having its own problems lately. Gold's been going down. So has Bitcoin, 4.21% for the day. We look at this weekly chart, we continue to see Bitcoin just hammering down. Derivative oscillators losing a little bit of downward momentum, but that price percent oscillator still heading down. Didn't reach the low of last week this week, but we do have a red down candle and down 4.21% for the day. Look at the 2-day, looked like it was getting close to crossing over, going up, and then just sort of paired that off and is running parallel to the red signal line. Maybe when we look at these spinning tops for the last 4 days and where things had previously bottomed, that we're not hitting that again. Maybe Bitcoin has found its bottom. Don't know. Could just be digesting where it hit and then plunging again like it did this last time. So we don't know. We just know there's a lot of downward pressure on Bitcoin. Look at the half day. You can see where things had peaked most recently earlier in the week on Tuesday, and then Wednesday and Thursday pegging back down again. So waiting for Bitcoin to find that bottom. And again, if you're interested in Bitcoin, have plans for Bitcoin in the future, then of course you need to start practice trading it now, following it every day with us. That's where we are, folks, as we end the day. Remember, markets are closed in the United States on Monday for the Independence Day, so it'll be a shortened week this next week. God bless you, my friends. All the best from the whole team at Charting Wealth World Headquarters.